Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Alrighty, we're going to do two things in this video. I had a couple members ask me some different questions, so we're going to go over two things. One is a member wanted to know what is a trailing stop, how do you use it, kind of thing, okay? I've done a video similar to this in the past, but I'm just going to cover specifically just a trailing stop within the context of locking in profits, because you could use a trailing stop for a variety of different strategies. But we're in this video, that's the first thing I'm going to cover. The second thing I'm going to cover is crude oil, because I have one or two members that are starting to trade futures. So for those members, welcome to a whole plethora of new opportunities that's going to open up as you begin to trade futures. So I just want to say, first of all, welcome to trading futures. And second, take your time. Don't be in a hurry. Okay, futures is not like trading stock. Futures and commodities is a huge advantage. There's a long list of futures products and commodities that you can trade. And just take your time. Don't be in a hurry. Learn it little by little. Over months and years, you're going to begin to really hone your craft and become a really good futures trader if you just be patient with yourself, okay? But today we're going to cover, specifically in this video, the second thing I'm going to cover is crude oil, because I have a member that wants to know about crude oil. They're just getting into trading that product, okay? We're gonna look at crude oil, the big contracts, to get the cycles down, but we'll touch on the E-micro product, E-micro crude, because I trade that myself, and I trade some other E-micro products, okay? So let's start with the trailing stop. I'll try to remember to put a couple links in the description just below this video. If you want to jump forward to the crude oil part, you can just click on the link in the description below the video. Otherwise, you can just watch the whole video, okay? So let's get started on trailing stop. So this is an E-micro product, futures product, okay? But it doesn't really matter what the product is. You can even product, when you hear me talking say words like product, I'm usually talking futures or commodities. Okay, we don't use that kind of language when you're trading equities, or in other words, stock. So anytime you hear somebody say products, they're talking about futures and commodities. But this particular member that asked me the question, I don't know what they're trading. They're probably trading stock. Okay. What I'm about to show you applies to anything. Stocks, futures, commodities. It doesn't matter what you're trading. Pretty much this applies to everything, okay? So this is called an order style, or type of order, I'm sorry. And it's known as a trailing stop. Now, as I mentioned in the beginning of this video, we're only, going to focus on using a trailing stop once you have a position that's profitable. So number one, if your position, and I'll just put POS, and that might be 50 shares, right? Whatever. Let's just say you got 50 shares of a stock. Okay, position 50 shares, and you got to wait till it's profitable. So in other words, if you buy low and expect it to go high, which is the most common type of trading when you're trading stock. Okay, but this also applies to if you're trading short and you're profiting on prices going down, okay, which is very common in futures trading. Okay, for those who don't know, when you're trading futures, as I've said before many times, up or down makes no difference. We profit off of the market going up and down, both. So it kind of cracks me up, really makes me laugh when I hear all these people who only trade bull and they hate bears, and it's just a bunch of nonsense. Okay, you need to get past that. Real traders profit in the market up and down. Okay, so get off the rah team stuff. That's just so ridiculous. It's preventing you from being the best trader you could be. It's preventing you from being very, very profitable. Okay, you must think about profiting regardless of direction of the market, up, down, and even sideways. Okay. All right, so back to trailing stop. In this particular case, let's just assume, see if I can erase this one. Yeah. Let's just assume that you bought low and you're expecting the price to go up. So let's say you bought, and it doesn't really matter. I'm not going to go into all the specifics, but let's say you're up $100. You're looking at your position, and you notice you're up $100. Here on the TD Ameritrade TOS Think or Swim, also known as TOS platform you're looking at here, that profit would show up here in these two boxes. So you'd have your profit for the day, you'd have your profit just for the position in general, which could be more than one day. You might be holding a position more than one day, right? So we would see the profit or the running profit or the potential running profit or loss. In other words, the profit or the loss the position's running at, even though you haven't closed the positions. That makes sense? These are called open positions. Okay. All right. So let's say you're up $100 on these 50 shares, and you want to lock in this profit. So that's what we're talking about in this video, because I got to be very specific, okay? Because there are other, like I said before, there are other ways to use a trailing stop, but we're going to talk about locking in profit. So on this channel, or with my members that are watching this video, and some of you I know are really green to trading, you're kind of new to trading, you want to know what's this whole thing that I talk about when I talk about locking in profits, and how is trailing stop used as part of my risk management strategy. Okay, that's what we're talking about here, okay? So let's lock in this $100. How do we do that? Okay, we may be looking at a futures product here instead of a stock, like Microsoft or something, but it doesn't matter. Let's say I buy 50 shares. Okay, and even though I know I got this under bid, let's just put over here on the buy order. Okay, let's say 50. Okay, say I bought 50 of these at this price, 3,916 points. Okay, because this is points, and a lot of people like to think in dollars, but this product trades in points, not dollars. Okay, but anyway, it doesn't really matter. We're going to buy 50 of these, stock or futures or whatever, at this price. Okay, and then let's say the price starts going up. You buy low here, you buy long, because we're on the green side. In this particular platform, green means long and red would mean short. Okay, bid ask, but we're going to buy long. We buy here, and let's say the price, let me get the little eraser going here. Okay, let's say the price starts going up, starts going this way. Okay, and it gets up to 3,918.25 points, and let's just say that equates to $100. Okay, it may not, doesn't really matter, but it's just you're running at a profit, and you want to lock in these profits. Okay, now this is just an example. What I'm about to show you doesn't mean that I want you to actually do this. Just an example, okay? So let's talk about what the nature of a trailing stop. Exactly what does it do? So first of all, a basic stop loss would be something that you would put in that would prevent you from taking a loss. That's why it's called a stop loss, right? A trailing stop moves with the market. Okay, it just basically takes a stop loss order and moves it as the market's going. In this case, as the market's going up, we're going to trail behind the market price. Okay, let's say that this market goes up even higher, the price of this product. Okay, let me clear the screen because I need a little more room here. Let's say we bought down here. Okay, the 50 shares or 50 contracts bought down here. Okay, and the price is starting to go up, and it's going up, and it's going up. Okay, let's say it gets way up here, and you're up $100, $200, $500, whatever it is. You're way up here now. Okay, and you see the $500 here. Woohoo! You're up $500. You want to lock in these profits. Okay. So what a trailing stop is going to do is you're going to, every broker and their software is a little bit different, and I'll go through the steps here real quick soon and show you how it's done on the TOS platform, okay? But every broker's software is a little different, so you'll have to figure it out with that particular piece of software, okay? But so how does trailing stop work? So the price is going up here, and you're going to tell that when you place the order, basically what you're going to do is you're telling the software that to move a stop loss behind a certain distance that the market's at. So if the market was here at 3,919, let's say we tell the software as we place the order, we want to trail behind this price. If this was the market price, we want to trail behind by 2 full points. So that'd be 3917.25 would be over here. Okay. So we're going to put in a trailing stop that trails by 2 full points. Okay. If it's a stock, it could be $2 or $5, whatever you want. Okay, it doesn't matter. So our market, which we'll just say M, is at 3919.25. And we're going to tell the software I want you to have a stop loss. I'll put that as SL. It's a type of order now. Stop loss is a type of order. It's the same thing as a limit. Okay. It's not the same thing as a limit, but it's a type. It's a type of order. So you just need to understand, it's a type of order that you place with your broker on the piece of software. Okay. It prevents you from taking big losses. You set your stop loss. Okay. So we're gonna, in the trailing stop though, we're basically telling the stop loss to trail behind this price. By how much? By a -2. In this case, we'll make it 200. Okay. Because remember, we're here. Let's say the market price is there, right? And we want to trail behind by 2 full points. So remember, the price has come all the way up to here. It's at 3919 and a quarter. You notice you're up $500, and but you don't want part of the point of this stop loss, a trailing stop loss, which this is now I'm going to put the T here because we're into what's called a trailing stop loss. But let's say you think the price may continue to go up. You're hoping it's going to continue to go up, right? Maybe it'll go up to $700, okay? But it isn't there yet, and you're watching it, hoping it'll go up, right? Okay. So the point of a trailing stop is that it's going to trail behind whatever the market price is by 2 points. So if this goes up to, I don't know, 29, 39, whatever, 25, way up in here somewhere. And your potential profit goes up with it. So what would happen is, since you're trailing by 2 full points, because you could trail 2 1/4, right? See how these are 1/4? Some stocks have increments of a dime. Some have increments of 1 penny. Depends on the stock, right? Okay. But here on this futures product, it moves in increments of 1/4, 0.25 points. Okay. But we're trailing by 2, -2. So if the market price is at 3919, the stop loss is down here at 3917. You'll even see it either on the chart, usually on the chart, or you'll see it in their software. It'll be right here. It'll have some type of like little indicator. It might even, I don't know, I'm just going to put TSLs, trailing stop loss. It'll be down here. You'll see it, and you'll probably see it on the chart. Okay. Now, if it starts going up, let's say it goes up here to 39, I'll put 25. Then what's going to happen to the stop loss is the software is automatically going to go up with the price of the market price. Is going to go up with it, but it's going to stay behind it by 2 full points. So I'm going to do the math, right? We know that 3919 1/4 minus 2 is 3917 1/4, right? Pretty simple math. But now the price of the market's gone up even more, so we're going to recalculate this. It's gone up. We're at this one up here, right? We've gone up to 3925. Whoops. 3925. Let's just call it 2925 flat. We're trailing by what? 2. So we're going to still use this -2. And now we all know what that is, right? 3923. Okay. So now your stop loss would move up to 3923. Up here somewhere. Okay. So now you may be asking, well, how does it lock in my profits? Because let's say the market does get up to 3925, but then the sellers start coming in. A lot of selling starts to happen, or market makers. I won't go into reasons why markets go up and down. Doesn't matter. Let's just say the price starts coming down. It's come down. It comes down. It comes down. It comes all the way back down and hits the 3923 price. It's no longer up here at 3925. It's come down and hits the 3923 price. Guess what? Your stop loss. Okay, in this case, it's this price right here. But the trailing stop loss will kick in, and it'll automatically close your position of these 50 shares or contracts, whatever you're trading. Okay, so if your profit up here was at 700, let's say, but it trailed back down but the price of the market came back down and hit the 3923, who knows, you might be at 550 bucks instead of profit. Or maybe it's even $75, however much you're trading, doesn't really matter. The point is, this strategy locked in some profit. Okay? That's the beauty of a trailing stop. You don't get caught up in, I could have made more, I could have made more, I could have made more. Just lock in the profits. I talk about this all the time. Book those profits to your brokerage account, and your brokerage account will grow. And as you mature as a trader, you're going to continue to leverage your larger and larger account. Okay, but you got to use a lot of wisdom and a lot of patience. Okay, now let's do a real trade. Today is Saturday, guys and gals, so I can't place a real trade. So I'm not sure exactly what's going to happen here with TD Ameritrade. We're going to try to just place an order, or at least demonstrate I'm placing an order. Okay, I'm going to use one contract for this e-micro product. You can think of it as one share. It doesn't matter. Okay. Now this may not work because I don't have any open positions, so I'm not sure how I'm going to make this happen. But let's see if we can get it to work. Okay. So all I did here on TD Ameritrade is, you can see as I hover over this green column, okay, it allows me just with one click of the mouse to bring up a little order box. Same thing over here on the ask side. So obviously red is for selling, to sell, because you can see it says sell. So if I wanted to short this product, I could short it. Shorting is you buy high with anticipation the price is going to go down. Longing a product or a stock or whatever is buy low with anticipation the price is going to go up. All right. You need to, for those that have never traded short, and all you ever think about is buying long and going long, you need to change the way you think and take advantage of markets moving up and down. Okay. And you really need to start thinking about trading futures and commodities, because that's where the real benefit is at trading the market bidirectionally. Okay. All right. So let's do this again. I'm just going to left click here. There, your brokerage software, like I said, may be different, but I'm just going to left click. We're going to bring up the order box. Okay. In this case, since we want to do a trailing stop, it's kind of a specialty order. I'm going to click edit. And we get this box down here, okay? All right. Now, not sure what's going to happen here. We're going to see what happens. Okay, you see there I clicked under order, and there's this trail stop. Okay? So we're going to pick that one. Okay? So one of the first things I'm going to do, and it's a good idea for you to do too, is change the day, the time frame to good till canceled. It's always a good idea to just trade on good till canceled. Some people might want only something to be day. Day traders may only want to be day, okay? But generally speaking, good to cancels is what I would normally do. I do a lot of swing trading. Okay, you can see it says trailing stop. Okay, what's the price? The price is the market price. You don't get to change that. Remember I talked about whatever the price of the market was? Because remember, this is going to trail the market price. All right. So now we want to know, well, how much do we want to trail? That's what this part is. That's what the way the TD Ameritrade's doing this. They call it mark, and that's fine. Okay, but this is basically the trail. There's two orders going on here. There's not two orders, but there's two elements to this one order. Okay, there's the trail stop and how much you want to trail. Okay, so for instance, earlier this week, I think it was Thursday and Friday, I had this exact product, this e-micro futures. I trail stopped an order and made like $300 on one specific trade with four contracts. But I had a pretty big trail for this product. I had like 10 full points I trailed. Okay, I traded long, so this is applicable. Normally I would be trading short in a bear market, but in this particular case I had a good feel for the market, so I traded long. Okay, so this is 10 full points. Remember before my example I only said 2. Okay, but this is 10. This is a real world situation I just did earlier in the week. Okay, if you didn't watch that video, you can go back look at some of my videos, especially if you're a member. But whatever, go back watch my videos, you'll see that I did a trail stop of 10. Okay, Now, right here, TD Ameritrade is probably not going to let me place this order because I don't have any open orders, okay? But you would click confirm and send. You'd get another dialog box here that would, like a little pop-up. It would say, are you sure you really want to do this kind of thing? And then I would click OK, all right? So what would happen here? Well, it would put the order here on this interface, and you would see it over here on the chart as well, okay? And let's just assume at this point I already had an open position because it's the only time you would place this order. Well, in the context of this video, the only time you would place this kind of order is, remember what I said, is only after the position is profitable. It's showing green and you've got some profit and you want to lock it in. Remember, that's the context of this video, right? And the context of using a trailing stop, right? So let's just assume I had a position. It was already profitable. Let's just say the price right now of this particular product was sure enough sitting here at 3916, okay? And I said, well, I want to trail and lock in some profits, and I do it by 10 points. So when I click confirm and send and click the one more dialog box that would come up, it would be 3906, 10 full points below this, down this way. Okay. So down here somewhere, way down here at 390600, because that's 10 below, there'd be a stop loss order sitting down there. Okay, and it would so everybody follow me. So let's say I'm just going to do this one more time. Let's say the price went up to 3917, went up just one full point here. Remember, this applies to stock too. Even though you hear me using futures jargon here, it applies to stock. So if it goes up 3917, what would happen to this price? Anybody know? Pause the video. Don't cheat. Don't wait for me to give you the answer. What would it do? Yeah, y'all are killing me. Okay. It would just trail behind 10 points from this new price. Right? So if we subtract 10 off of 3917, what do we get? We get I'll put it up here. 3907, right? So the stop loss order would go up the same amount that the market price went up. But it would just be trailing behind it way down here at 3907. And that's the real key. You got to get that concept in your mind. And again, let's say I was up, I don't know, $750, $1,000, $10,000, $100, $50, whatever. Okay, there's a limit, right? There's a kind of a limit. You don't want to be putting trailing stops when you have hardly any profit going on. Okay, but you can if you want to experiment. That's okay. It's okay if you got a small account and you're just trying things out. It's okay to book a $15 or $10 profit. Because I think stocks especially are basically trading for free nowadays, commission free. So don't be afraid to try it out. Okay? Just get over the nervousness, take a couple deep breaths, and just try it out, okay? You can just do it with one share. This way you're not going to compromise your account. Just do it on a cheap stock that doesn't move around a lot or just moves a little bit, and you can try it out, okay? All right. So let's say that's fine. It went up a full point here. The trail came up to 3907. But let's say it's lunchtime, and then after lunchtime, the market starts selling off, and it comes all the way down to just 3907. Because now remember, the market's going down. The trailing stop is not going to move. It's not going to move. It's just going to sit there. Sorry. It's going to sit here. Because the price would have to continue to go up for this trailing stop to go up and trail behind it. Okay, if the market starts coming down, this does not move. It just stays right there, and that's the key point. So it comes down, down, down. 30 minutes, an hour later, 2 hours later, the market's getting ready to close. I'm just painting a scenario here, right? Just illustration purposes only. Comes all the way down to 3907, and bango, your stop loss order kicks in, closes the position, and whatever your profit was at that time gets locked in and books to your account. Okay, that's how it works. So now some of you may be asking, and the video's getting long, but just hang with me. Some of you may be asking, well, how do I know what my profit would be? How do I know how much to trail? You got to bring out the spreadsheet, man. You have to get your spreadsheets out if you don't know. I'm not telling you should trail by 10. That was just what I did. I gave it a lot. That's a lot of room to breathe, by the way, on this particular product. 10 full points. But my position was already running at a really big profit, so I didn't mind letting it trail by 10. You might only trail on a stock $1 or $2 or $3 or whatever. I don't know. To know how much to put the trail amount at has a lot to do with the product itself or the stock itself. Okay? So you have to have a certain feel and familiarity with the product or the stock or whatever you're trading. Okay? You don't want to be trailing so far behind that if it did come all the way back down and hit that you would actually close the position out at a loss. Then you'd be defeating the purpose of the trailing stop, right? So remember what I said at the beginning of the video. You want to make sure your position's running at a pretty decent profit before you use this strategy. Okay? Now, for you newbies, that's fine. It's okay to be new. I was new once too to all this. Okay? Don't be afraid to try the trailing stop. Just keep the position really, really small just in case you make a mistake. It won't hurt your account. Okay? Even if that just means one share. Okay? Just do it with one share. One share, tinker around with your trailing stop, get used to it. If you need to contact your broker to help you out to set up a trailing stop, go ahead and do it. Okay? So trailing stop can, and I use it very often to lock in my profits, and I hope that this portion of the video helped you out on how to do that, okay? All right, now I'm going to switch over to crude oil for another member that asked. So that takes care of that part. I'm going to delete that. So let's look at the CME group for crude oil. This is where you're going to get all of the details for your different futures and commodities products, at least a lot of them. In this case, since we're talking about crude oil, let's take a look at this. You can see right here is crude oil futures. Okay. Right now I have it on the calendar, yeah? So something for crude oil specifically, which this would be this /CL that you see in the video, or even the /MCL. Okay. So what you want to pay attention to is the contract month, in this case, July 2022. This is the symbol. But also on the continuous contract, it'll probably just say July. So if you've got the MCL or the CL, it'll probably, for TD Ameritrade, just has it as July, the current contract. I'm sorry, has it as August. Yeah, not July. I think it has it as August. Okay, this one. But so it'll just have CL. If you want to trade, you could put this symbol in specifically if you want to trade any future contracts, you could do that. Okay, but the current one is this one. But what I want you to pay attention to is, see how it says right here, last trade? Let me get a different color. Last trade, see that right there? So first trade, last trade. So the last, this top one is the first trade, obviously. The bottom one, that's the first trade. The last trade, so the last trade you can make is on this day. It's basically the expiration. See how it says July 20th? Even though the contract month says August, it actually expires in July. I hate that they do that, but that's what they do. Now, not most futures or commodities don't do this, but crude oil does. So if you're trading whatever month that your broker's software you're using, whatever month it says, if you're trading crude oil, be aware it actually expires like, whatever this is, about 2 weeks-ish before this month actually starts. So it's always the month before with crude oil. So with that in mind, if it's getting near the end of July or even if I'm just a month away, sometimes I'll trade the next contract and I'll specifically type this into the software and trade the month further out because I want a little more time. Right? Now, so just be aware of those when you're trading crude oil, the expiration date's really important. You don't want to be trading really close to this expiration date because that means you don't have a lot of time to react to events, right? Okay, so that's one thing. The other question that I know was asked was, well, how come other contracts like these in the future, further out, right? These are future dates, if you will, going into the future. I know it's called a future, but in this case, we're talking literally the future. Okay. Why are some of these contracts in the future, why are the prices different? The prices are different because the market as a whole, the marketplace, which includes all these contracts, well, at least the ones that are currently listable, okay, and are actively being traded, because some of these may not be actively being traded. But in a nutshell, the market, if you will, and market makers are factoring in a lot of variables to determine what the price is going to be, let's say way out here in the future, 2023. Okay. So I'm going to switch back to the software. We're going to look at the difference between this month's contract and this month. So I just remember U22. And we're going to look at the difference in price. So we're going to look at the difference between these two. Okay. All right, so here we are on the continuous contract, which, let me get the right color, is sure enough August. See that? August. Light sweet crude, continuous contract, CL. $107 that finished on Friday. So now we're going to go over to CLU, which should be, I think it's going to be September. Let's see what that one is. You'll notice TD Ameritrade comes up and it gives me a list of all the U's. These are all future, look at all these other years, 23, 24, all these future years, but we're going to pick 22. See how it says 103? And the other one was 107. That's a big difference. That doesn't happen too often, that big of a difference. So let's talk about why. Why is there such a big difference in price between these two? Okay. So we know that August crude oil is about 107. In September, see September right there. Why is September so much lower? What is going on? Okay. Why is it so much lower? Well, look at this huge, massive price decline that's happened since about June 9th all the way to June 24th, right? June 9th up here, June 24th down here. Okay. So why is the price so much cheaper? Because they're anticipating that the price may continue to decline. Right, and they've got algorithms up the wazoo, right? They've got all these different conditions and mathematics and everything they're using to forecast where they think this price is going. So that's factored in. So they think, September prices, they actually believe that this price, 103.90, accurately represents September crude oil prices. That's another way to look at it. Follow me? The market as a whole, if you will, including market makers and blah, 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 okay, believe that 103.9 accurately represents the price of crude oil come September. Now, it may not actually be that. It doesn't really matter. The point is that's what they believe. Right? And traders and whoever else has influenced crude oil for this month's contract, September, has all been factored in. Okay, makes sense? So remember, you could go out, and crude oil trades way out into the future. There's lots of other contracts, right? You've got October. It's one of the most highly traded commodities in the world is crude oil. I mean, it is. That's why it has you'll notice not every commodity or futures has every month can be traded. Some of them are just traded on quarterly contracts. But crude oil is every month, November, December. It's just going to keep on going year round. It's so heavily traded, they have one for every month. So this is the price that the market as a whole believes accurately represents September crude oil prices. It doesn't really truly mean that when we get in September it will be this price. It just means at the moment this is what they believe it accurately represents, okay? And we, as you, me, everybody else trading September contracts, if we trade them. Our influence and other big market makers and movers and shakers, right, are moving the crude oil prices. Okay, there's options and other things coming into play and a lot of calculation going on behind the scenes. All that data is accumulated and it helps drive the market. Okay, there's a lot going on behind the scenes that has this price nearly $3 or $4, 3 or 4 points, I should say, lower than August. So that's the beauty of futures and commodities. You're actually thinking about, just if you think about it, you're actually trading on something that's in the future. That's why it's called futures. You're actually trading on that. That's the concept. Okay, but within the domain of just this one contract within September, it doesn't really matter. Yeah, you're just trading prices up and down, right? It's really in that within that the context of that, of just September, if you were choosing to trade just this contract, CLU22, it's no big deal. You're just trading up and down on this particular product for this month. That's it. You don't really got to worry too much about why there's a big price difference. Now, I haven't looked at this product in a while because I've been busy and haven't had a chance to trade much other than the S&P 500. Okay, but this is a daily chart that goes back, I don't know, a little bit more than a year. So I haven't looked at this in a while, but you can see that I had some geometry here already. And you can see crude oil made a pretty big high over here, came down back in March, did the ziggy-zaggy, kind of does its bouncy thing, and came up and touched this, and that's how we were able to establish this kind of this slightly sideways channel, a little bit downward biased channel. And now we're down here, and it broke through this line right here that I had, trend line. So I'm going to get rid of that. Okay. This is messing me up because it's over here right now. I'm used to having it over here. Let me put it over here. Okay, so what do I think crude oil is going to do? Let's just talk about that, right? So I took a look at these cycles a little bit before I did the video today. I'm just going to spread this out a little bit. And let me just look at these cycles one more time because I didn't spend a lot of time looking at them. Okay, crude oil. That was back in February. I like what I'm seeing there. This little down is good. Okay. Some of you may be saying, well, what is this guy doing? What are these funky looking, soon to be yellow arcs? What are those? This is called cycle analysis. Now, for the member I'm doing this video for, I know he's already familiar, at least somewhat familiar with cycles. Okay, and he follows Papa Slim just like I do. All right, so I'm just eyeballing these cycles. This one looks pretty bang on. This one's bang on. Cycle analysis is an element of time. Wherever these two arcs come together, we would normally expect to see price decline down into it. It doesn't always do that. Okay. You notice how this cycle over here was very strong from after it came down a little bit. It just basically was strong almost the whole way. And then at the very last few days of this cycle, it dropped down. That's a very bullish indication, right? That's a very bullish cycle. And then the next cycle started. In this case, it was very strong, crazy strong. And just about the middle of this cycle, it made a big turnaround, came all the way down. And look at that, it bottomed right there. So cycle analysis, which I'll just put as CA, is predictive. Predictive. Okay, horrible. Can't spell right now. Yes, it forecasts the future. Look at this one over here. It's forecasting that something's going to happen with the price over here. Ain't that pretty cool? We actually have techniques to help us forecast where we think price is going to go. Okay, and we look at the past to help us determine whether or not these forecasting predictions are accurate. Okay, and so far this one's pretty accurate. The price came up, came down, came up again, came down. Was it bang on? It ran a little late, but that's okay. We don't mind that. As long as it's within a couple days is acceptable. Look at this right here. It came down right in the middle of this cycle. Beautiful. This one too, right in the middle of the cycle. Boom. Very common occurrence. Again, boom, right in the middle of the cycle. And here, guys, this one little candlestick is supposed to be the low. You'll hear some cycle analysts, particularly Steve Miller, will call that being swamped. That's fine. You know, call it what you want. I don't really like seeing that, but it doesn't matter whether I like it or not. That's the way it is. I don't really call this a very predictable cycle low, okay? I'm more about how accurate was it, how much of a decline did we see down into these cycle lows. If we don't see them, I don't put an X near them. Doesn't mean it's bad. It just means I don't want to count it, because I'm about probability in this case. Talking probabilities. The higher we get declines down into the more often we get declines down into these cycle lows, observable declines, then the more credibility I'm going to assign to these cycles and have a degree of confidence is what I'm trying to say. So, all right. So where are we at? Well, we got this huge from about right there was that cycle low. Not much of a cycle low. Okay. All right. But it came up, boom, from that point on, and then monster mashed it. Just crash, bang, boom. All right. So where are we at right now? June 28th. So, we're talking what? 25, 26. I guess that's Wednesday coming up. Okay. So this cycle low for crude oil is supposed to be June 28th. But guess what? It may already have happened right there. It's possible. We'll have to wait to see what happens going into next week. We may get like a little sideways and it may come down one more time or something. We'll have to see what that does, okay? But, so would I trade this right now? No, I would not trade it right now. There's just no way I'm trading this right now. It's what I call like in between two cycles. It's already done its big droppy thing. Okay, it could drop some more. I don't know. We'll see. These indicators are starting to suggest that the price is going to increase. Big Mac Daddy is like a waterfall going on here, so it hasn't responded like these fast-moving indicators have. Okay, I already tried to apply the change of direction indicator or the certainty rate to this. It didn't work. Okay, it works well for the S&P 500. It does not work at all, at least on my initial observations for the crude oil. So I'm not even going to put it on here. Okay, you can if you want to and experiment with it and check it out for yourself, obviously. But I didn't like what I was looking at. All right, so what do I think? Well, I think crude oil probably going to get a bounce here. But I want to wait for confirmation. Right, especially as we go into this next cycle. I think right now these cycles still look really good, man. They look like they're just firing on all cylinders. It's crazy consistent. Okay, crazy. So I would wait a few days to see, does it really come down into the 28th? What's going on here? Why am I not getting? Yeah, does it come down into here? Are we done? Is there a little bit more to come down? Okay. So what's the next cycle? The next cycle starts on June 28th and goes all the way out to July 24th. Okay. So just based on history, I would be inclined to think next week, we might see some flattening out here. Could come down a little more. Might start going up. It's hard to say because we're right in this like in-between zone. But I would wait to see for this price to start coming up into this cycle. Okay. That's what I would do. I want to see the MACD at least start making some kind of effort to come pinching together. Don't get out ahead of it. Don't get ahead of it, man. I used to do this all the time. I used to react to these fast-moving indicators and get burned. So I'm talking to you specifically now. I'm not going to mention the name. I know you're watching this video. Don't get out ahead of this. Just be patient. Wait for this MACD to kind of give you more of an indications coming up. Okay? You can hit me up on chat. I'll try to do best I can to look at crude oils as it's developing. But that's what I would do. I would just wait to see what this thing does. Does it start to come up? And take advantage of this rising phase if it happens on this next cycle. That's my take on what I think crude oil is going to do. It hasn't come all the way down here. And if it doesn't come down here, which looks like it won't, then this is pretty strong, right? Because look at this. It's pretty... yeah. That tail there is a little concerning. But it didn't come down and touch this lower line at all. So, I mean, we got something kind of like this going on right now. If that continues, then this looks strong to me at the moment. Fart around, and then boom. Maybe it gets all the way up there, maybe it doesn't, I don't know. And then back down into this one. Okay. So that's my best guess right there, yeah? All right, let's switch over to MCL. You can always pause this video and come back and look at it a few times, and just, you'll know my thoughts. So I don't have the cycles on here, but it's basically the same thing. And we're just looking at MCL. So for me, on the TD Ameritrade, who's my broker that I normally trade with, okay, I can access the futures tab You type in the product. I don't know how it is on the Trading View, and some other brokers. You'll have to maybe use their PDFs and look up some of the specs. Okay, they may not have this kind of detail like TD Ameritrade does, but down here, in case you don't know, the tick size and the tick value would be the same regardless of what broker you're on. Now, the initial margin is probably going to be different for your broker. It may be less, it may be more. So you really got to pay attention to that initial margin. That is really important. Okay. But if you want, I have a spreadsheet for all the futures products and commodities that I trade. If you want that spreadsheet, just let me know. I'll put a link either in the, just hit me up on the Discord server. It's better to do it there. You can even direct message me, and I'll give you a link, okay? And you can pick up the spreadsheet that I use. You can adjust the spreadsheet and the calculations and formulas for whatever you want to do, okay? For your broker's initial margin, okay? That really helps to know what kind of margin is going to be against your account. So for one contract with TD Ameritrade right now at the moment, they're charging $2,112.55 US dollars here against my account. So I have to have that much in my account to trade this product. This used to be much cheaper, by the way. They really jacked up the price. It's crazy. Okay, so this is not a cheap product anymore. It used to be cheap. Now it's just gotten ridiculous. I wish the CME and the brokers would just make up their damn mind and stop playing games with retail traders. But anyway, that is not a cheap initial margin in my book. But in any case, whatever the margin is, just be aware of it. One contract's going to put this kind of dent in your margin. Two would obviously be twice, about 4,224.25. Three, is 246, whatever that is, $6,336, somewhere around there, maybe a little more. So just be aware, of that initial margin. That's a biggie. Okay, so you need to do your calculations and know. And remember, as price moves up and down, it's adding or taking away from your account's value. Okay. So be aware of that. You're trading against margin, yeah? All right. So, I haven't looked at this in a while, but if I had been looking at this about a week and a half, 2 weeks ago, oh my gosh, this right here, I would have shorted the snot out of this. Absolutely would have shorted the snot out of this and probably picked up about 2 or 3 days of profit right there. That's what I would have done. Now it's crossed over very strongly, so that's why I say be patient. We're down here walling around in the mud. MACD hasn't responded yet. And you really want to wait for both the price to show something, because remember, we're below the 50 here. That's a little bit sketchy. You want to see the price come up, and you want to see the MACD begin to pinch down and do its thing and start to turn over. You don't got to wait for it to completely cross over and do all that, because that might be a little late. But you don't want to get ahead of this. Okay? All right. And if you haven't traded futures before, just start small. Yeah, just do your one contract or whatever you can do on your account, one or two contracts. Okay? All right. Those are my thoughts on crude oil. I think it's time to be patient a little bit. I wouldn't jump into any positions just yet. I'm excited also about copper. But, though I'm not necessarily going to jump into any positions right away because I need to take a little time to study copper out. But yeah, there's a lot of opportunities going on. So I hope that helps you out a little bit about my thoughts about the crude oil and the E-micro approach to leveraging and taking advantage of this product. Is just, to me, is amazing. All the E-micro products are amazing. All right, that's it. I hope you all enjoyed the video. This is going to be a members only video, so I'll put the time stamps in the description below the video. So if you want to look at the jump to the crude oil part of the video, you could just click that link and jump over the trailing stop part. Okay. All right. God bless you guys. Talk to you all real soon again next time.